Time yet again for the markets. Here's Zach Ashmore with a look at this month's supply and demand report.
Thanks, Mike. Well, what goes up must come down, as they say, and on Friday, markets took a dive. Let's take a look. Last week's biggest loss, lumber down about $280, but corn and wheat also down in a big way, about 88 cents and 54 cents respectively, corn getting the worst of it. Last week's only gain, soybean oil. Soybeans didn't join in with other grain crops, only dropping 3.5 cents. One reason for these drastic new numbers is this month's WASDE report. There's a good bit to get through, so let's dig in.
U.S. wheat outlook is for smaller supplies, higher domestic use, lower exports, and reduced stocks. Total 2021-22 domestic use projected 6% higher on higher feed and residual and food use. Global wheat outlook is for higher supplies, higher consumption, increased trade, and marginally higher stocks. Supplies projected to increase 8.1 million tons. Production projected at a record 789 million tons. U.S. corn supply and use outlook is for greater production and domestic use, lower exports, and increased ending stocks. The corn crop is projected at 15 billion bushels, up from last year. Global outlook is for record production and use and larger ending stocks. World corn production forecast record high with largest increases in the U.S., Brazil, China, Ukraine, and Argentina. U.S. rice projection is for reduced supplies, exports, domestic use, and ending stocks. Total 2021-22 supplies projected down 2% from last year. Global outlook shows higher production, consumption, exports, and lower stocks. Production projected at 505.4 million tons, up slightly from last year's record. Consumption projected 15.3 million tons, up nearly 8 million from the previous year. U.S. soybean supply and use projections include lower supplies, lower exports, higher crush, and higher ending stocks. The soybean crop is projected at 4.4 billion bushels, up 270 million from last year. Global outlook shows higher production, exports, and ending stocks. Production forecast up 22.6 million tons. Brazil's crop forecast at a record 144 million tons, while Argentina's crop rises 5 million tons. Total U.S. red meat and poultry production for 2022 is forecast above 2021 as higher pork and poultry production more than offset lower beef production. Turkey production forecast higher along with eggs and milk. Beef, pork, and broiler exports are raised. Turkey exports reduced slightly. Beef imports raised as lower imports from Australia offset by product from other suppliers. Annual cattle price forecast little change from last month. U.S. cotton for 2021-22 projected to rise 2.4 million bales, but total supply is projected at its lowest in 5 years. 2020-21 U.S. cotton production reduced slightly from last month. Export forecast is increased 500,000 bales. World cotton projections show global supply about unchanged from last year. Higher production offsets higher consumption.
So, based on that info, corn, wheat, and soybeans down. Market analyst Ted Seifert gives us the details of why.
The trade, for the most part, was looking for a 1.3 billion bushel carryover. I think we had been factoring in something maybe even slightly smaller than that. The USDA gave us a little over 1.5 billion bushel carryover, and that's not especially tight. And it's kind of hard to justify $6.40 corn at a 1.5 billion bushel carryover. Now, there's going to be a lot of people that say, okay, the USDA is lowering exports 325 million bushels from last year to the new crop. And since the USDA did these numbers, we've seen China purchase a little over 5 million metric tons. Now, if you give the USDA a chance to do their export number again, would they raise it? Maybe. I don't know. I'm not going to argue with that. But then you have to say, all right, when we looked at planting intentions, you know, we were talking just under 92 million acres of corn. There's going to be more corn acres, very likely. The weather has been good for that. If you look at what prices of corn have done since December 1st, December corn versus November beans since December 1st has had an unprecedented rally against that November bean contract. So if we're getting anything in acres, which everybody seems to think there's more acres out there, it's going to be a lot of corn. So even if I bump the exports, the increase in production on those acres probably offset that and then some. So we could easily start talking about a 1.6, 1.7, 1.8 billion bushel carryover in corn. And then, oh boy, we have a problem. Now, there'll be others that say, well, a 179.5 national average yield is 3 bushels over the record that we currently have. And with the dry conditions that we have out west, it looks rather unlikely at this point that we're going to hit that 179.5. But it's really early to say that. And yes, you have an improving weather forecast, which was a big part of why we saw weakness early in the week and then again at the end of the week. We've been doing this for the last 4 months on panels and individually where I've said we were never really in a position where we had to price ration demand for corn in a very big way, like we did have to do for soybean. We were never completely running out of corn. We had tightness in the cash market because end users were worried about what was going to happen towards the tail end of this year if our exports had kept up, and we had a very strong basis. So there were reasons to rally corn, but we were never really in danger of completely running out of corn unless China had kept buying old crop supplies. But at this point, we kind of see them more canceling than anything else.
And that's it for a deeper look into the markets.